All right, guys, throughout the year, we get underwriting updates from Fannie Mae and Freddie Mac, almost like on a weekly or monthly basis. A lot of them are just marginal, but a couple big ones, can take place every year. And so this year for 2024 going on to 2025, the biggest thing that changed was the FHA gift rule. And this is a Fannie Mae thing for us because we do all of our FHA through Fannie Mae. Beforehand, you needed to show donor ability to provide the funds, which was AKA you got to show the donor's bank statement. Okay, so now you can just show that the funds left the donor's account and that's it. This is massive because if you have to show a donor's bank statement, the underwriter can get all picky and flick and thumb through any little deposit in there that they feel like they didn't like or wasn't sourced from something, and then they can say, okay, well, you can't have this donor give this much money because I don't know where this input that is leading up to this money that's going to go to this new buyer, I don't know where that's coming from. So you have this issue on foreign gifts. Foreign gifts are a nightmare because you have to show the bank statement of the donor. And on conventional conforming gifts, you don't have to do that. Guys, gifts are huge. I had about 70% of my first-time buyers last year not even bring a down payment of their own. They either used a zero down program or a VA zero down loan or got money from family. So for us to now not have to technically even show an account statement from anybody, it's wild. It's awesome. That's by far the best improvement that we got. Now there's a new thing out, number 2, called LPA Choice. LP is called Loan Prospector. That's a decision engine that Freddie Mac has to basically give you that automatic underwriting approval when you get pre-qualified. You got to get that approval. So now if you don't get that approval, they have some messaging on there that's going to tell you as a loan officer, hey, if you guys get your credit improved, or if you have more reserves, or if your income's better, if you're maybe delete some debts off your liability sheet, that's what we recommend in terms of you then potentially putting this puzzle together and getting an approval. So without that LPA choice, you don't know what to improve on the buyer's financial position in order to then send the file back to Freddie Mac or Fannie Mae and getting approval. It's just a guessing game. You can alter stuff and update until you finally get an approval and a match. But LPA choice, that's a big thing for 2025. Another thing, number 3 for this year, it's not really an update, but adjustable rate mortgages. I really haven't given out an adjustable rate mortgage on a Fannie Freddie product it's going on 3 years now. They're good on jumbos. They can work there potentially, but ARMs are still an issue in 2025. Loan limits for this year, every county gets at least to do a conventional conforming loan up to $806,500. You can even do 3% down there. And then the high cost limit areas, the more expensive places closer to urban areas, you can get a conforming conventional loan up to $1.209,750,000. That's $1,209,750. So you can do 5% down up to that area. So, this is like your big hubs. This is your Miami. Actually, not Miami. Miami, they don't even have, the increased loan limits. Florida just has a flat 806,500 loan limit for every county, just like Texas. So, but if you're in Boston, New York, Los Angeles, DC, those areas in the counties nearby, you can get those higher loan limits there. But you could literally do in those areas like a 5% down loan on a house of about, what is that? 1.25 million, 1.25 million, 5% down, crazy. And then the same is true for the rest of the counties with the just the lower loan limit of 806,500. You can not 5% down, but you can do. Well, yeah, sure, you could do 5% down on an $830,000 home, but you can do these 3% down loans in these counties with the loan limit of 806,500 up to $830,000. 3% down, $830,000 in any county, conventional conforming. Rate-wise, Powell has come out and basically out of his last press conference, there's an article here I'll give to you. Powell's press conference offered no reprieve as he confirmed the Fed was entering a new policy-making phase marked by the possibility of pausing rate cuts and the reality that current rates are closer to neutral than previously believed. Guys, it's just like what I said in this video here about 6s and 7s being the equilibrium. If you look back towards this area, there was like a 15-year period after the 80s inflation correction period, and then some of the early 90s and that as well brought inflation back down. Then after, from like 92 to 2007, 2008, we had this, equilibrium period where rates are about 6s and 7s. And then the housing crash hit, and then rates became lower for a significant amount of time. But guys, those are the big changes for 2025. Keep tuned. Please subscribe. Share this with somebody that you think could use this information. Maybe you've got an industry colleague, maybe you're a real estate agent. Would love to share this with as many people as possible, and give people my first time buyer guide, especially if you're an agent and you have buyers that are trying to learn the mortgage process. There's a link to it in my playlist section. Thank you.